morning, everyone. Welcome. On behalf of Allcock and Marcus and our fantastic panel this morning, I want to thank you all for taking the time to join us for this important, exciting, educational webinar. We know how busy everyone is, especially this time of year. So we appreciate your attendance and participation this morning. Few housekeeping tips before we get started. We shouldn't have any issues, but if everyone can just make sure that they mute themselves so as to not have any kind of distraction or interruption for our panelists, that would be great. We will have a dedicated Q&A section at the end of the discussion. So if you have any questions, you can just write them in the chat or in the Q&A box. I will monitor them and make sure that they get answered at the end of our discussion this morning. The webinar is being recorded. It'll be available afterwards if you want to play it back. For anyone that wasn't able to attend this morning, that will be available once we conclude this morning. And lastly, there is a little Easter egg hidden throughout our presentation this morning in the PowerPoint. So keep your eyes peeled for that. And as soon as somebody gets it, write it in the chat. And at the end, we'll announce if somebody got it correct and hopefully who that person is. And whoever can figure that out will get a couple of Celtics tickets for an upcoming game on behalf of courtesy of Allcock and Marcus. So that's exciting. At the very least, someone might be able to get that out of this webinar. So definitely be on the lookout for any sort of hidden messages. So now that that's out of the way, again, welcome to this morning's webinar, Construction and Operational Contracts in Condominiums, the Importance of Vetting, Insurance, and Contractual Risk Transfer. We have three wonderful panelists this morning who each bring a unique and interesting perspective to this important conversation. We are joined by Ed Allcock, Managing Partner of the law firm Allcock and Marcus. We have noushig.hagopian, who is a Senior Vice President at First Service Residential. And last but certainly not least, we have Kevin.Kehoe, who is a Senior Vice President of Sales Commercial Lines at Assured Partners. So with that, I will turn the mic over to Ed.
Good morning, everybody. Thanks for attending. A couple of additional housekeeping. I'll also monitor the chat, and when appropriate, feel free, we'll try to weave in some answers to questions as we go. In terms of the hidden Easter egg, what I'd like to say on the hidden Easter egg is that it's kind of a theme. Look to the PowerPoint. You will maybe see what the theme is through the PowerPoint. That's my last tip on that. So let's start talking about contracts. And when we're talking about contracts in the condominium world, as a lawyer, I often find myself saying what not to do. Because a lot of these get to me, unfortunately, at the stage where I have to litigate issues pertaining to the contract. So, this call, this Zoom is about preventing litigation, much to my detriment. It's about closing gaps and figuring out how to get from point A to point B, not just on construction. And we know construction's a big thing in condominiums now with associations that have been around for 20, 40, 50 years, undertaking significant repairs and remediation projects. But I think this also comes up in the day-to-day operations, the kind of contracts we enter into with our snowplow vendors, our landscape vendors, and so forth. So what I want to start with is, kind of in the middle of the discussion. And then we're going to go back to the beginning. So what I say is what not to do. So what you see on on your screen right now is one of those sample contracts that sort of irks me. I'm assuming it irks Kevin and it irks noushig. You know, this here appears to have been a 12-unit condo. This was a roofing project. You know, 6 figures, not small 6 figures, mid 6 figures. The contract is 2 pages long. 2 pages long, and you know, it contains a schedule, payment, of course. That's the number one thing the contractor wants. It's got some scope of work. There's some weird drawings on it. There's some signatures. There's a warranty, but not much else. And you know, I want to kind of go over, you know, like some of the things that 2-pager is missing. For example, it has no termination provision. Like what if one party wants to terminate the contract for some reason? There's no insurance provision, nothing in there, and that's going to be a big topic of what we talk about today. There's nothing in there that says the insurer is required to, the contractor is required to carry insurance. Does he have to carry insurance? What if he doesn't have insurance? You're going to hear from some of our panelists today saying, not only do we want to make sure he carries insurance, we want to make sure he's got the right kind of insurance. We want to make sure he names the association as an additional insured. That 2-pager, nothing, doesn't speak to what happens if one party breaches. What happens if the contractor doesn't show up on the date and time he's supposed to? Are you entitled to default him? Are you entitled to damages? What happens if he doesn't perform in the middle of the contract? Are you entitled to terminate? Are you entitled to breach? Are you entitled to delay damages? How is progress for payment determined? If you go back and look at that contract, it says upon signature 50%, when work is completed, the other 50%. Well, how do you determine when work is completed? Does the contractor just say, oh, work is completed? Is there a third party that looks at it to say work is completed? What does that contract say about change orders? Nothing. Doesn't say anything. Is there a change order process? Or is everybody stuck with that price? And how does that affect ultimately the product that you're going to get? So, you know, nobody said that it's easy when you are in a contract with, and some of these contracts now, I'm hearing about them. Talked to one property manager the other day, $48 million. Okay, that's a lot of money. Even $600,000 is a lot of money to have riding on a 2-page contract. So what happens, when the contractor gets halfway into the job, as has happened a lot in the last 4 years, and says, oh, costs have gone up, there's inflation, and the contractor wants more money. Are you stuck? What if there's a personal injury on the job site? Noushig, didn't you have a situation on a job site where something happened?
Yes, unforeseen issue with a crane that fell actually during a project. Thank God everything was okay, and we were very well prepared. Everything was insured in line. But you never know, Ed, when things like this are going to happen. And oftentimes it's no one's fault. Accidents happen. And I think the message here is to be as prepared as possible.
Kevin, what if there's a fire or property damage, right? You say, okay, well, how is there going to be a fire if we're bringing the plumber in to do some plumbing? Kevin,
it wasn't a fire, but the plumber was using his torch to change out a hot water heater, and while using the torch, he set off the sprinkler system in the building, causing $350,000 of damage. The contractor was there. on a phone call. There was no opportunity to subrogate against them. The association's insurance was canceled. They find themselves in surplus lines paying 300 to 400% more in annual premium because they didn't vet the contractor correctly.
So the one of the themes today, like I said, it's not easy to go through all of this stuff beforehand. But what you're doing, and what my job a lot of times is protecting you from the parade of horribles that can happen. And the 2-page contract doesn't do it, and the consequences can be great. I mean, you're spending all this money to get a contract done. Now, do you have to spend additional money? Do you have to put an insurance claim in? Are you now in surplus lines? Wait a minute. Doing this contract because you were in such a hurry to get the work done, and you didn't want to deal with the lawyers, you didn't want to deal with the pre-contract vetting. It's now put you in a worse position than you were to begin with. And as noushig said, some of the takeaways are you need to think, if you're on a board or if you're a property manager, that this is not just a home. It's a multi-million-dollar organization. The way to think about it is, and people think, okay, my home's worth $450,000. Well, there's 200 of those homes. You're talking about running an organization with a value in the millions or the tens of millions, which means when you're on that board, you can't be thinking small. You can't be thinking 450. You got to be thinking 20 million. You need to think like a CEO, and you need to use professionals. When we talk about contracts, one of the easiest things to do, and I know Kevin has a funny story, is the contractor sends you over his form, and Kevin, tell the story about what happened when you got the contractor's form.
Yeah. A very large Metro West association with the units valued over $1 million a piece were hiring a well-known local construction company to change the roofs. And they submitted their contract to the association, who fortunately was smart enough to forward it right over to their attorney. The contract required the association to name the contractor as additional insured on the association's policy and to submit their liability policy confirming they're set up for roofing operations. I mean, that violates the terms of their master policy in multiple ways. When I called the contractor, I said, you know what, we can't sign this because it's a violation of the master policy. And the contract manager for this company said, oh, that's okay. I'll send you the B version of our contract, which should be compliant.
I'll send you the other form.
The other one.
I'll send you the form that you should be signing, but I'm going to try to get you to sign the other form. So what always happens is the contractor sends over their form, and then, my preference is to start with the AIA form, because it's designed to be fair and balanced. The terms have been negotiated and vetted by architects and industry people all over the country, and you can sort of take out paragraphs, put in paragraphs, take out sections, put in sections, and everybody sort of knows what they're working with. I'm not saying you have to use that contract. That's a good start, but as a general rule, try not to use the contractor's default, especially if they already have sort of the B form. So with all of that in mind, let's go back to the start, and let's talk about the sort of pre-contract process. Noushig, why don't you take us off on sort of how how, like when you're dealing with a construction contract, or even when you take over a new place and you're vetting new operational contracts, how do you guys start this?
Yeah, so we always start with looking at what's in place. Specifically, is it serving the community? Is it, serving the contractor, and just generally looking to make sure that we're protecting all of the interests of our communities. That's number one. And in terms of projects, and that's sort of taking things up really another notch in terms of the investment that the association is going to make in these projects. And we really want to always try to educate our boards and our communities as to really what's involved, because it's a very serious and important process. And as our boards are doing their duty to protect and preserve the asset, this is a really big part of it. And this really encompasses everything from fixing your balconies to roof repairs and replacements and disaster recovery. As Kevin mentioned, sometimes, unfortunately, there's big accidents that require, repair, electrical work, plumbing work, even sustainability updates, such as, solar and charging stations, parking lot and road paving. We've seen a lot of that. Those are things that, need to be done on a regular basis. And other types of important work that's being done in your community. You really want to start with identifying, what the specific project is, and then consulting with subject matter experts, such as engineers, architects, whoever you need to help you and the community make a good decision about how you would like to proceed with this process. For example, if you're doing your roof, maybe there's better materials that are available now to you that are going to last longer, that are going to add to the value of your asset. Determining the exact scope of the work. What is it exactly that we are doing with this specific project, and creating an estimated timeline. We also offer, obviously have your management company work with you on securing loans and establishing, if there's going to be an assessment, making sure that that's done in an orderly fashion and very transparent with your community. And then preparing a really thorough, comprehensive RFP, which really states the exact, steps of this project, what it entails, using your architect and engineer, their insight and input to exactly what this project is. And then I agree with Ed, the AIA form is a really great place to start. I think it's very comprehensive, it's customizable. And I think the other really good thing about it is it's pretty easy to understand. I think, it's thorough, but it's fairly easy to understand and customize. So once you get to that point, you really want to, make sure your RFP is great and comprehensive, and then you're going to share it, with your, put out the RFP to your, vendors. And what we always recommend is, collect your bid sheets, compile them, put them on a spreadsheet so your boards can see them and feel like they're really able to compare the various bids. And then, obviously your vendors, hopefully that are bidding, are going to want to come and see the project. Hopefully they are. If they're not, then, that might be a little bit of a red flag if your vendors doesn't want to come out and actually see what they're doing. And then, present that, to your boards, and then make a good decision about what which direction you want to go in. And obviously, vetting your vendors is a very, very, very big part of, this process. Let's see. So looking at this slide, maybe next slide.
Sure.
Talked a little bit about, picking the right vendor. And I think we've talked a lot about that. That's really, really important. You want to have the right partner with you to do this, because there's a lot going on. It's a disruption to your community. It's a big commitment financially, emotionally. There's people around, there's a lot of, construction. So, how do we vet bidders? And, what's the process for that? And a lot of companies right now, I know our organization is depending on using third-party vendors to help thoroughly vet vendors. And I'm sorry, Ed, I'm going a little back and forth, so.
No,
bear
you're
with me here.
fine.
Yeah,
You-
okay.
You're fine. I got a request to put the slideshow on the full screen, and I'm
Okay.
not sure I know how to do that.
I'll keep going.
Please
so-
do.
The reason why, a lot of organizations are doing this, and it's not just management companies, it's a lot of, organizations, many disciplines that really want to make sure that the vendors and the business partners that they are using are completely vetted. And this has a lot to do with, insurance, obviously, which Kevin, can comment a little bit on. Do they have the right coverage? Are the indemnifications correct? Do they have the right limits? Do they have everything that is required to make sure that when they work on your site, that your community is protected? Are there background checks being done? Are there any outstanding judgments, liens, collections, bankruptcies, foreclosures? Are they on the national watch list? And here's another big one, which we found. Do they have the right license? It's hard to believe, but sometimes you might have a vendor that says they have a specific license, and come to find out, it may not be active, it may be expired, or they may not even have it. So always put yourselves in a position to make sure that you are really vetting your vendors. This could lead to, unfortunate issues if they're not properly vetted. So, we always say we won't even present someone who we know has not gone through our vendor credentialing process, because we don't want our boards to consider them if they're not willing and want to do that actively for them as well.
2 points on that, Noushig. So, I have to say, I appreciate that approach, because I wind up having to deal with a lot of the back end of this stuff, where I wind up having to sue a contractor, and usually it's messy, it's millions of dollars, and I have to say, how the hell did they pick this guy? Because he has no insurance, he has no assets, and as far as I can tell, he's done everything improperly or incorrectly. And I am kind of curious, because I know like these third-party vendors. Kevin, what can you tell me about these companies like Vive and Compliance Depot that I think are becoming more mainstream as part of the construction vetting process? What are they? I think Noushig's gone over a little bit about it.
Noushig touched on it. They drill down. Are they properly licensed? Do they have financial capacity? Have there been issues? But a lot of our conversation has been focused on the vendor selection for capital projects. And we need to have this vetting for all contractors who service the property. And this is where the Vive and the Compliance Depot programs come into play, because any vendor, including the capital project vendors who operate on the site, have to go through this system, and they're vetted. A couple of years ago, it was an emergency, end of the day. I'm speaking to more the operational side, the snow removal, the landscape, the plumbing. We heard about a plumber earlier, an electrician, a multi-story condominium association brought an electrician in. They were having an issue with the distribution panel. The electrician went down to the main panel in the building, and accidentally the screwdriver fell out of his shirt pocket. That screwdriver hit the main bus duct, which shorted out the building, causing millions of dollars of damage, not to mention putting the electrician in the hospital. This was an unvetted, very innocent thing, but it's accidental. And the consequences cause issues for this association now for a number of years. Insurance companies are completely aware that associations hire contractors to perform their work. Every insurance company application for condominiums has a whole series of questions about how the contract is being vetted. You know, is there a written contract or agreement? Do they have $1 million of liability? Is it hold harmless? Is there a requirement to name additional insured? Every single insurance application for condominiums include these questions. And when an underwriter sees no's to these answers, they decline the account. It's just good business practice to vet your contractors, all of your contractors. And the days when the association said, well, you know, Vinny's been working for us for 10 years and we can't find anyone cheaper. Well, you know what? That just is a potential liability for the association. And, you know, we all have to step up and protect the assets of the association. It's essential. And that's how you're going to protect your insurability, but also your financial capacity.
Hey,
And we
Kevin,
do get a lot of,
I'm sorry. Go ahead.
sorry,
Joshi.
Ed, but I just wanted to touch on one thing that Kevin said. We do get sometimes a lot of pushback about this. Specifically, there's a cost involved, but it really is protecting the association. And again, to Kevin's point, crazy things happen in our buildings. Things we don't expect, things we don't anticipate, unfortunate incidents that, again, aren't necessarily done with any malice or any, you know, no one wants to necessarily do harm, but, you know, things happen. And the world is changing now. And, you know, things are different now. Using, you know, the local person who, you know, we love to use, but they don't have the right insurance, you know, you're really putting yourselves at risk. And sometimes it's difficult because price seems to drive a lot of decisions, which, you know, aren't always the best, you know, way to go, because when you're dealing with a multi-million-dollar asset, you know, as you said earlier, thinking like CEOs and business people is really the way to go when you're making decisions like this.
So one of the things I noted, it's on this slide, it's on the bottom of the slide. And, you know, we're talking about the next generation. My understanding is like these programs, they have like built-in artificial intelligence. And let's say you have 10 or 12 vendors on a property. My understanding is these programs will notify you if an insurance policy of a vendor has lapsed or expired, which will allow you to immediately contact that person, which otherwise, I mean, to me, that's, you know, the text of this slide is science in progress. You know, to me, that's science in progress, and sort of helping us keep on top of something, which in the past, like, how would you keep on top of whether or not the landscaper and the snowplow guy's insurance certificate has been canceled 5 months into the contract? You wouldn't be able to keep on top of that. So this,
yeah, actually, yeah, the actual third-party vendor notifies the vendor that their insurance is about to expire, that they need to submit the updated information, and they'll also notify the management company that's in progress. And if it doesn't happen, we're notified as well. So it's great like that. And look, insurance expires every year. So like you said, like, who has the bandwidth to, you know, mark down every single time a vendor's insurance expires? That's probably not realistic in our daily life as you know, property managers and whatnot.
and it could be canceled with,
Right.
you know, for any number of reasons, as Kevin will
Yes.
tell you.
Yeah.
And how would you know?
Well, the other thing to keep in mind that, you know, when you're not part of a VIVE or Compliance Depot program and you're not listed as additional insured, no one would know if your insurance gets canceled. And what's concerning is oftentimes the small contractors who service the property, they don't even know it's been canceled because they do their paperwork on the weekend. And you know what, guess last weekend had a great football game. And so they didn't do their paperwork. They didn't open the envelope that said, if you fail to complete your audit, your insurance is canceled on Tuesday. They had no idea.
I don't know that there've been that
But
many.
they handed you a certificate of insurance on Monday. And I would encourage anyone to read the top section of an insurance certificate. It's really meaningless unless you have additional insured status through a written contract. And so you've got to be really careful about this stuff.
Well, one of the things, Kevin, that you mentioned, I don't know that anybody's really been enthralled with any football games on Sundays lately. So maybe that would help. But one of the things that that I've actually had, if you can believe it, I've actually gotten a call from a board president and said, like, hey, we want to use this vendor, and the management company is requiring them to go through one of these programs, whether it's Vive or Compliance Depot, and there's a cost to the vendor. And I don't think it was like $150, right? So I get this call, and the call goes on for half an hour. Quite frankly, the cost of the call cost the association more than it did for the vendor to simply pay to get vetted. But to me, if one of the noushig talked about red flags. If I've got a vendor that's saying I don't want to pay $150 to usually get what is a pretty good contract for them. Usually association contracts are good contracts. It's a good client to have. And if they're refusing or balking at $150 to be vetted, does that raise a red flag in your mind, noushig or Kevin? I think it raises one.
It's a complete red flag. I mean, most times when they sign up for to work for a management company, they become the vendor for that management company, and it's not usually just for one property. They can service multiple properties. There's a great stream of revenue there, and the contractors has a peace of mind knowing that if they do cause damage, that it's going to be protected, that they're not going to injure a third party, be it the association, property, or someone on the property.
I think it's true. I think one of the things that really drives this is it's a change. It's different. I've never done this before. Oh my gosh, it's I have to. It's work for them. Quite honestly, they have to go. They have to go through. They have to register. They have to provide a lot of information. Then they have to pay. But what they're doing is they're really setting themselves up also for to be viewed. To make sure that they are, as you said, Ed, ready to serve this community. And a lot of time, I think it's shifted a lot as this becomes more common in our world. We've seen a little bit less resistance, but to your point, Ed, there is resistance sometimes, and it's just a matter really of educating our boards and communities as to why we're doing this and showing them, look, this is what happens could happen if you don't. And we love this vendor too; he's fantastic, but let's protect the community. Let's protect him also to make sure that he's got the right insurance to do the work, and that the licensing is all there. So it's really a situation where everyone benefits from this, and just really, again, educating everyone and getting everyone understanding that yes, this is a little bit of a change, but this is the direction that things are going in now, and it will protect everyone.
Well, I think that is one of the main themes here, is about sort of changing the mindset, and we've all had to go through it. I had to. I was one of the last people, I think, in America or the world that still had a BlackBerry, and eventually I had to change it to an iPhone. And then, as Kevin mentioned, some people may know I'm a big Patriots fan, season ticket holder, and I missed my paper tickets, and I got to make sure I got to put things in the wallet, and but the world around us is changing, and while not all changes are for the better, I do think this is one of those changes. So one of the things, let's talk about why we vet. Kevin, tell me a little bit about why we need to be vetting. You've alluded to some of it with examples.
Well, every association has to have vendors in. And one of the reasons is every application, the insurance companies say, who are you using? We touched on this earlier. They want to know that there's good contractual risk transfer in place, because when there is damage to the property or someone's injured, they have the pathway to go after the party that caused the damage and to try to restore the association financially. The vetting, it comes down to contractual risk transfer. Maybe we'll skip ahead a little bit. I'm not sure everyone understands what contractual risk transfer is. And it's asking the contractor who you're paying a lot of money to, whether it's being the snow removal, the roofing, the landscaper contractor, you want them to be responsible for their actions. So if the contractor were to cause damage to the property, injury to someone, you have a written contract that requires them to stand behind the damage they caused. So that's the risk, and it kind of makes sense. If you're going to pay a roofer $2 million to put roofs on your buildings, you want to make sure that they have the ability to pay for or fund any damage or injury they cause. I mean, it makes sense. And we talked about it earlier. There are a lot of contractors who will turn around and ask the association to name them as additional insured, which is absolutely backwards. When I look at the risk transfer, it goes way beyond the capital project, where there are a lot of eyes on that $2 million roofing contract, but not a lot of eyes when you bring the plumber in to change your water heater. So it runs the whole gamut of what we're trying to do. And when there's poor risk transfer, we had an incident 2 years ago, an association, there was a slip and fall in the parking lot in the wintertime. So the insurance company, they reported the claim, the insurance company adjuster came in, they looked at the contract, which not only there wasn't a contract, so they weren't named as additional insured, but when they looked at the contractor's insurance, and this is to the vetting point again, the contractor was a landscape contractor who was not set up for liability for snow removal. So they're out plowing a parking lot for an association, and they don't even have the insurance to do that. It's the wrong type of insurance. That association was non-renewed. And those are the issues that come with it. And, we touched on it earlier, again, is you can't sign the contractor's contract. Those are one-sided. We need to get the B version of those contracts, but better yet, we need to be on an AIA contract, because as Ed pointed out, they're designed to be fair to all parties involved. So
There needs to be some negotiation. I mean, it's the lawyer doesn't need to always start from scratch, but there are key terms. There are key things. There are the indemnity provisions, there are the insurance provisions, there's the vetting, and I wanted to just go back a little bit. Since I jumped Kevin ahead, why do we vet? And why is it important today, now, 2024? Well, we all know that the lending industry right now is tight. Interest rates are up, and the lenders in a condominium, anybody that's having to deal with lender questionnaires, knows that it's not as easy to get a loan now as it was 15 years ago. The lender questionnaires are very detailed. Fannie Mae and Freddie Mac are on top of the lenders. They don't want another lending industry collapse like they had in 2008. Kevin, insurance industry. One of the things that I've been seeing, in Noushig, I'm sure you've been seeing, and this freaks boards out, because they're seeing skyrocketing insurance premiums, I don't know, 37%, 50%,
about 200%.
200%.
Yeah, that's what's going on. And when I think about contractual risk transfer, which it should be essential, but when I'm thinking about it, not performing effective contractual risk transfer, in my mind, is a self-inflicted wound. The industry, the insurance industry for the last 18 months has really tightened up. After the collapse of the Champlain Towers in 2020, there's been a lot of focus on the industry and how we're doing work within the industry. But on average, well, let me say it this way. For the first time in 18 months, I saw a single-digit premium increase on the renewal. Otherwise, I've been looking at double-digit or triple-digit increases. And the associations that are getting tagged with these big increases are the ones that are having claims. And the last thing in the world you want to do is have to file a claim on your master policy because you didn't properly vet your contractor. That's a self-inflicted wound. And it'll live with you for 3 to 5 years.
You know, the funny thing, Kevin, and I know you know this because I tried to work with you on a couple of these properties, but for the first time in my career, I've seen some associations have to go to self-insurance. They can't get a policy. They cannot obtain, they've gone even into the secondary market, can't get a master policy. And those places are trembling in their boots because if there's a loss, it's on everybody. And I've even spoken with a couple of those associations and said, do we want to terminate the condominium and sell the property to somebody else? Because if you get hit, you know, it's a kill shot. It really is. And you know, we've got this, like I said, we got the tightened market as a result, as Kevin mentioned, Champlain Towers. Fannie Mae's got a blacklist certain associations where people can't get loans. And that blacklist is for things like inadequate insurance, inadequate reserves, and critical repairs. I would say those are the three biggest things. And I know when we were putting this program together, you know, Noushig wanted to sort of, you know, remind the boards, of what their duty is when they're elected. A lot of board members, they run for the board on a campaign like, you know, no new taxes. I'm going to keep condo fees down. But Noushig, what is their duty?
Yeah, so I mean, that's definitely something that we really, really try to, you know, really educate our boards and, you know, have them aligned in their duty, their fiduciary responsibility to protect and preserve the asset and to make the necessary decisions in order to do that. And, you know, it's not always popular, but, you know, that's their job. They're the ones that are tasked and have been duly elected or appointed to make sure that what is being done in the community is proper and all of the maintenance that is required is done. And if it's not, then, you know, imagine the consequences of that. And, you know, we don't want to think about anything awful, but if you know if you are a board and you know that your roof, you've looked at your reserve study, you know, it's telling you that you've got to replace it. You've got to replace it. Or you've got balconies, or you've got other major components in your communities that need to be replaced, then it is your duty to you know, make those replacements. And in terms of sort of the day-to-day, it's your duty to make sure that the property is being well maintained every day as well, and not to try to necessarily cut corners because, okay, we understand, we want, you know, our job is to help our communities and all of us on this call together, you know, as your business partners, to try to make sure that, you know, we can help you, you know, do the best that we can in every way to be fiscally responsible. But there's also this duty to make sure that the asset is being properly maintained.
And to that end, what I'm finding is the insurance companies, particularly the D&O carriers, are asking for copies of the financials. They're doing quick financial ratios on it. They're looking at what's being funded for reserves. And I'm starting to run into situations where I can't get special coverage, special perils coverage, which is the broadest form of property coverage, and we want special perils. Your condominium documents ask for special perils, but because roofs haven't been done and other updates haven't been done, I'm getting basic perils, and so not everything's being covered. The other thing I wanted to touch on is, I spoke a lot about the operational vetting of operational contractors. And, when you sit down and think about that, that might seem like an insurmountable task, but it's really pretty simple. You run the list of 1099s for the last couple of years, you identify, 90% of your vendors who service the property, you put them on a contract with insurance requirements, hold harmless language, additional insured, and you leave it as an evergreen contract. It continues to run until canceled. So you list your 15 vendors, you sign them up to a contractor, and those become the preferred vendors, and you have effective contractual risk transfer. I just wanted to touch on, it's really easy to do. It takes a little bit of work up front, but then it's just let AI take it from there.
That's actually a good talking point. And this will be the last couple. We're going to get into construction management. Couple of questions, both for you, Noushig, and you, Kevin. One of the questions that I saw in the chat was, we talk about AIA when it comes to construction. Is there an AIA type form for operational contracts? I don't know that I've seen.
I haven't seen one, Ed.
No.
But I will tell you, I've worked with some associations and give them the bullet points and then they'll hire their attorney and reduce it to essentially a 2-page contract where it says the scope of work is as assigned, the pricing is as agreed, and then it has all the insurance, the hold harmless, and then that's a 2-page contract that we want signed.
I got an idea. How about we all get together and create this standard form and go into business selling and pitching the AIA of operational contracts.
Yeah.
One of the other questions was, and I don't know if you've encountered this, Noushig, there was a question about bidders and a thought of having a pre-bid conference with all vendors to get everybody to have Q&A and establish a level playing field for bidding. Because, some contractors might feel, oh, well, there are preferred vendors and it's not as level. Have you guys ever done anything or contemplated doing anything like a pre-bidding conference?
We have done that in the past for certain projects where, it really requires the bidders to be on site, where we can give them a tour, where the engineer can talk a little bit more about the actual scope and what's required. So in that sense, I don't see that there's anything wrong with that. I mean, that's a way to get everyone really educated and understanding of what the project entails. And, they'll see who else is bidding, but, what difference does it make? I don't think that makes a big difference. But I think in terms of being efficient for projects that, require that, I think that's perfectly acceptable. And we have done that in the past.
Now, here's another, so on to the next slide. No one ever said it would be this hard, is sometimes the management of the project, right? So you vetted, you selected, we negotiated a good contract, we got everything in place, we got the policies. Now the association has to deal with the construction project. And let's assume for sake of argument that we're talking about a construction project. So in all likelihood, you're dealing hopefully with an architect who is, or an engineer who is overseeing the project and recommending when payment should be made, like okay, he's hit 10%, he's hit 20%, he's following the scope, he's in compliance with his contract documents. But then it's more than that. Noushig.
Yeah.
So tell me like you're managing a construction project. What is the manager's role usually at that point? It's not like you guys can just ignore
Oh no.
ignore the
Yeah.
contract.
Definitely not. And there's Ed, there's a lot that needs to be done. That's sort of separate from the day-to-day responsibilities of overseeing the community. There's a lot of entities involved that need to be managed. There's regular meetings, there's communications to owners, to vendors, to the architect, making sure that everyone is on the same page, managing the schedule, change orders, approving and processing the progress billings, making sure, to your point, that they're being adequately signed off on by the architect or engineer, keeping track of all the invoices and all the payments sort of in a separate spreadsheet that you can maintain and keep and share with the board, so you know exactly where you are. Again, change orders, and then the day-to-day of having sort of that actual construction happening in the community, arranging access, to common areas, sometimes units, oftentimes units, ensuring that the site is well maintained during the construction process. I mean, this is people's homes, sometimes as much as we try to be, fully, give our construction partners and our vendors as much information about the sort of the do's and don'ts of what to do when you're on site. Are they playing loud music? Are they leaving trash everywhere? Is the site picked up properly at the end of the day? Again, are communications being adequately sent out to, boards, owners? Are meetings being held on a regular basis? So there's a lot to it, and it does require, experience and knowledge and a good skill set aside from the day-to-day, aspects of the building operations to do this. And it's a big investment, so it needs to be done, with a deft hand and a lot of attention to detail.
And sometimes, like I've encountered some boards say, well, we don't want to pay the manager a fee, which is sometimes contained in the manager's contract. So let's go get an independent construction manager. Does that really change? I mean, it's not like you can't be involved then either, right?
Yeah, and what happens then is that the manager is still, if there's sort of a third-party site person managing independently overseeing this, they still have to have the manager make sure that they have access. They still have to, communicate with the manager. Manager still has to do many tasks in order to make that successful as well. And I'm not advocating, this isn't about necessarily the fee, but the fee is covering all of these extra duties that the management company is providing for this project.
Well,
so and plus they know the property, they know the owners, they know they know the ins and outs of sort of the hot buttons and how best to help the community sort of get through this with minimal interruption.
Yeah, and my point wasn't to highlight that either, other than, again, I think we're talking about changing the mindset.
Yes.
And the mindset is, oh, why do I have to pay this fee? I don't want to pay this fee. Let's not pay this fee. Let's, and without an understanding of what is involved. And that, like, you just don't have a contractor walk onto the site and perform the work, and the manager just goes and manages the property, and they're like separate entities. It's a major disruption, and a lot of times they need to find things. Where are the utilities? Where are the shutoffs? How do I get into Mrs. Jones' unit to do the mold remediation? How do I do this? And the only answer to that is usually the manager. So it's not like you can get away from it, and it's not like it's like there's not some sort of value. I did get a question in the chat about something I mentioned earlier, which was, somebody said, I was told that condo docs don't allow associations to self-insure. I understood it to be mostly all condo docs. Is this a specific association then? The answer is no. Every single condominium document I've ever seen usually requires the association to obtain a master policy at full replacement cost. The issue is, in today's market, what if you can't? What if you can't? Okay, so they've tried, 5 different agents. They've been put into the market, and nobody will bid the project or bind the project for insurance. It's a problem because because then you've got board members that are afraid to serve because they're like, well, there's no insurance. The document said we're supposed to get insurance. We couldn't get insurance. What do we do? What happens? That's why I said we started talking to them about maybe it's time to terminate your condominium and sell the land and the units to a developer to do something else with it. It's a serious problem, and that particular association, the issue was caused by failing to manage their building, then failing to manage their construction projects, having significant claims, and then being unable to get insurance. It's exactly what it's exactly what we're talking about. So we're kind of nearing the end, and I'll just kind of go over, what if the job goes bad? Litigation concerns. The first thing you're going to be looking for in your contracts, have you provided for indemnity of defense? Do you have appropriate insurance? Can we notify the insurers if there's a claim? The number one piece of advice I can give you is if you start to sense a problem on your construction project, involve the professionals. Get in terms, get with your attorney, contractor's not performing, and what about this concern in the contract? We've had this issue happen. So I think we got that done in just about an hour.
Ed, there was one question in the chat I mentioned about the snow removal landscaping contract, and make sure, how do you know they're insured for that? You ask for a copy of their policy, the exposure page, and it should show that they have snow removal and have a dollar value there. And so it's you just have to ask that question. Again, it's part of the vetting.
And I think that's where these vetting programs come in. And I think that's also, one of the takeaways from today is involve your professionals. We've got a team here of, varied practices. We got legal, we got insurance, we got management, and we all have to work with each other on a regular basis, in the condominium world, in the condominium industry. And if you have a question like that, I think it's important to involve the professionals, and especially when you've got the professionals saying, hey, use these programs for vetting with the new technology, change the mindset. I think it helps. Noushig, I saw one question on here. How do you deal with the shadow board person who's lobbying for her candidate, the guy that she knows or he knows as a contractor, and the better candidate gets defeated? I'm assuming you've seen that in the past. And what do you do in a situation like that?
I don't know much about the particulars for this specific situation, but we're big advocates of always trying to get our boards aligned to work. Again, I don't know the specifics of the situation or why this particular board member likes that particular service provider. I don't know that, but it's up to us to educate our boards to make the best decision on behalf of the community. That that's their duty, that's their job, and to be able to again have good discussions about the various vendors and then make a good decision about what the best vendor or whatever the situation is here for the community. It happens a lot. I think the boards have to look at the majority of the board, that's the will. If they're taking a vote and they're voting, for this specific vendor, then, everyone should respect that vote. But again, I think the robust discussion and maybe having the other board members really be fully honest with this particular board member as to, you know, what their concerns are and really being able to have a good, honest discussion about it.
Have you had any scenarios where, you know, one question came up, like what if you're not, I mean, I know that since the pandemic, getting good vendors has been difficult. Have you had scenarios where you don't have enough vendors responding to RFPs, and what do you do if that occurs?
I think that was definitely an issue very much post-COVID. I think we're seeing that it's improved a lot. Again, you know, having good relationships with your vendors is always, you know, best practices, making sure that, you know, we're respecting them, making sure they're being paid on time, making sure that, you know, everything that we're doing to be their partner is in everyone's best interest. And I think just, you know, being really, you know, really proactive and identifying and having your management company help you identify good vendors. That would, for me, that would be part of their responsibility, and that should be something that's a priority for them if that's the instruction that they're getting from the board. But, you know, are we always able to get 3 bids for everything? You know, typically we try, but sometimes you have to, you know, if it's a time sensitive thing, if you can get 2 really good bids, at least you have the board be able to make an educated decision based on 2 solid bids with 2 solid business partners.
So I think, you know, the takeaways are, you know, vet your contractors, construction or operations, negotiate your contracts, transfer and eliminate as much risk as you can, transfer it to the contractor through indemnity provisions, make sure you've got appropriate insurance in case one of the parade of horribles happens, then manage your project and your contractors. And when you're in doubt, you know, involve the professionals. I do think sometimes, you know, like, and I see it, it's like, oh, you know, we don't want to deal with a lawyer. You know, this is only a couple $100,000. You know, he's gonna delay it. It's gonna take him a while. Look at the contract. Then there's gonna be back and forth with their lawyer. Well, in my view, you know, that's a little bit short-sighted. Whether you're involving me, whether you're involving Noushig, whether you're involving Kevin, because sometimes you spend that time and effort at the beginning and you don't have a large expense or a catastrophic failure at the end. You don't wind up in the surplus market pool. You don't wind up not being able to get insurance. You don't wind up in litigation. Look, the last person really you want to see is me, because you have, look, I tell my clients, you're going to see me at the next 4 annual meetings to tell you what the update on the litigation is. And all the while, you're going to be paying me to litigate the case. Whereas if we had properly transferred the risk and spent a couple of hours doing that with the initial contract, you wouldn't be seeing me for the next 4 years. Again, that's really against my self-interest, but that's the best way to do it. You know, and you know, it's not just about changing the mindset, but it's about, like anything else. If you're playing a football game, if you're you know, doing your job the best you can, you sort of try to prepare that at the beginning, and then have a plan, and hopefully the outcome goes the way you expected. But if it doesn't, you've protected yourself along the way. Kevin, any last thoughts?
No, I think we covered an awful lot here. I guess it's avoid self-inflicted wounds by properly vetting your contractors.
And Noushig, any thoughts? Any last thoughts?
Just to your point, Ed, rely on your business partners to help you navigate through sometimes very difficult waters, but know that, all of us are always working in your best interest.
Okay, so I haven't seen anybody try to figure out what the little hidden theme was.
Oh, they found it out early on. I
We
think someone
got
at
two in the
1019
chat.
Oh, we
nailed it.
do. I missed it?
1019, Jason.
1019.
The titles of the slides, songs here, song lyrics, Coldplay, and then
Wow, excellent.
Kara came in and said it's the scientist.
Did I get the Q&A, Tiffany? Is there anything else that you think we need to address?
I think the only one was a question from Paul about reserve studies. Did we touch on that?
No, I don't think so.
Okay.
Yeah, I think he wanted to know, and actually I saw another one about so how often should you do a reserve study? I don't know that there's a specific legal time frame for it. I know Fannie Mae is starting to contemplate like 10 years after the creation of the condominium, and then updating it every 5 years thereafter. I think right now that's a little loose. Noushig, have you come across, do you have any specific advice on how often an association it depends on the building type, but do you have anything in terms of reserve study recommendations?
Yeah, Ed, typically 5 years is sort of the, unspoken rule. Again, I'm not a reserve specialist, but I think that's what they would say. And again, sometimes depending on inflation and depending on if things have changed in your building, maybe an update every 2 or 3 years, and then sort of redoing it, or really looking at it seriously at least every 5 years.
Yeah, I think Fannie Mae is starting to say within the first 10, and then every 5 years later, and I wouldn't be surprised if that becomes a hard and fast rule as they continue to clamp down on the lending industry. I did see somebody ask a question about contracts using permit approvals to document completion points. I think sometimes, your construction contracts can document specific completion points. I think the general rule is, percentages of completion, or specific tasks, not so much permit approval, like, they finished the boiler room. Okay, the architect certifies they finished the boiler room, you're entitled to 20% of they finished the exterior cladding. Okay, you're entitled to second 20%. I think it's usually, or sometimes it's just based on percentage value of the contract. The architect has a way of breaking down let's say the $20 million over the various tasks in the contract, and they work out a methodology or system, at least in my experience.
Yeah.
With
There are a couple of questions in the Q&A. They say, who should be additionally insured when contractors are hired?
Great question.
And the answer is your management contract requires the association to name the property managers additional insured. So when you enter into written contracts, not only is the association should be named additional insured, but the management company should be as well.
Okay. I think I want to thank everybody for joining us. And I hope that you found this to be useful. And I know one of the things that a lot of people ask in the chat is, can they get a copy of the program? They actually can. If you email myself, Ed at AM Condo Law, we'll be able to not only get you a copy of the program, but you can also have a copy of the PowerPoint. And I know Tiffany is going to be in contact with the winner of sort of our Easter egg hunt. And I don't know, I'm kind of feeling like if we got two people that were really close in time, then maybe we should be giving out a couple of Easter baskets, not just one, Tiff. So we can talk about that, and Tiff can reach out. Thanks for having us, folks. We really appreciate your time, your attentiveness, and your participation on a somewhat dreary Wednesday afternoon. And hopefully we'll see you around in future webinars or out and about, and hopefully not as part of any catastrophe.
Yeah. Have a great day.
Thank you, everyone.
Bye,
Bye.
everybody.
Bye.
Thank you, everyone.